Hey hustlers, welcome back to my channel. I'm so excited to be here. Today we are talking about where to invest your money with as little or with 500 rand or less. And this is misconception that in order for you to invest you have to have this loads and loads amount of money, and you know, you have to be loaded and you need to have lots of money to see great return but the truth is you can invest from as little as 500 rand or less. If you want to find out what these different investment places are, then of course keep on watching. Okay, so the first place, and my favorite place, I really enjoy this platform, and it is Easy Equities. You can invest from as little as 50 rand or less, once off or reoccurring. You can find shares on Easy Equities from as little as 12 rand a share. I'm not even joking. And one thing that I really love about Easy Equities is that you can create a demo account where you can just trade, buy shares and just get comfortable and teach yourself about investing before even putting in real investment or real money, which helps you get into the groove of investing, understanding it a bit more and taking it at your own pace and at your own level, and just at the end of the day getting you to be comfortable to obviously buy a share and invest on that platform. And I highly recommend Easy Equities. It's very easy to follow. It's just such a great and well-rounded and well-created app that helps anyone from a novice investor to someone who is very well-versed and is like a well-seasoned investor. I will leave the link of Easy Equities down below. And then the second thing is impact investing. Now this is a new concept in South Africa, and what impact investing is, or basically is, it's for investors who want to, who is determined in generating a return or a result from social or environmental influence, and also at the same time getting some financial returns at the same time. And one company that does this really well, or has introduced impact investing into the market, is Fed Group. You can invest from as little as 300 rand on blueberries. Yes, blueberries. And the concept or the idea of impact investing is for you to own some farming assets without actually owning the farm. And some of these farming assets that Fed Group has vary from solar panels, blueberries, and even honeybees as well. So if this is an interest of yours, I'll leave the link down below. You can check them out and just read more about it. But it's such a great concept, and it's such a great idea or way of investing, and you can start investing from as low as 300 rand. The next one and the third one is unit trust. What unit trusts is a pooled resource of different investors where they bring cash together and they invest. So this is basically just a group allowing a group of investors to come with cash, bring cash together, and investing this cash together in a pooled resource. And the advantage of this is that there's a lower risk of investment because of the diversification of the asset classes that are invested in. And another advantage is that this asset or this type of investment is managed by a professional, and they're usually called fund managers, and they make sure they're the ones who make decisions of how to diversify your investments, where to put it, how to obviously leverage your risk, balancing it out between high, medium, and low risk investments. And there's just someone hands-on making sure and looking after your fund and your investment as the group. And companies or advanced and examples of asset management firms that allow you to invest from as little or from 500 rand or less is PSG, fund managers, Old Mutual, unit trusts, Allen Gray, and then another one that I found that was really interesting is Coronation. And Coronation allows you to invest with them for as little as 1 rand. Yes, you heard right, 1 rand. I'll leave all the links of these companies down below for you to check out as well. Then the fourth investment place that you can invest for 500 rand or less is an exchange traded fund, which is also known as an ETF. And what this is just, it's not actively managed like the unit trust. And what this is that it tracks an index. And what an index is a statistical measure of change in the securities market. And what this measures, or what a simpler way of explaining this is that it's holding shares in the index at same proportions. So example of this will be the JSE top 40, and this could be an index that's managed in the fund, in the exchange traded fund. And obviously, because this is a passively managed type of investment, it's not as active as the unit trust, so obviously it's way more cheaper. And there's companies that range from 250 or less that you can invest with them, either at a recurring, meaning you're investing every single month 250, or once off, and that's Sastrix, Core Shares, and even also Easy Equities. I'll leave all of that down below as well, so you can check out those websites. Then the fifth and final one that I'll talk about today is tax-free savings accounts. And the amazing benefit of a tax-free savings account is that it's the most effective way to invest or save, because any interest that you receive, any dividends that you receive, or any capital gains that you receive are tax-free, provided that you don't exceed the limit, the annual limit of 33,000 Rand contributions, or 2,750 Rand per month. But obviously we are talking about 500 Rand here per month, so you won't exceed your limits in that time frame. And I mean, tax-free savings accounts can be found in many different types of businesses and companies. Easy Equities, banks offer that, Old Mutual, and all the other companies that I've mentioned also offer tax-free savings accounts or investment options. Now on the topic of talking about investing and, you know, like putting your money away, I want to just talk about things that you should consider or avoid when we are talking on the topic of investment. And one thing or three things that you should really consider when you are investing is liquidity, its tax, and its cost. Liquidity, what I mean by liquidity is how liquid is that investment? How easily accessible are your funds to you? Or is it a waiting period of 2 years or 3 years or 4 years or 5 years before you can actually access your funds? And this is very important, especially if you are wanting to do any change or make any changes or pull out your funds because you want to put it in a better option or a better investment opportunity. You know, your investment that you choose should be liquid. And then tax, what are the tax implications of the investment that you've chosen? How much tax do you pay on returns from this investment? Like, look at all those things and read up about the tax implications, because this is very important. And the third one is costs. What are the costs entailed in obviously having this investment? For example, in your unit trust, you have a fund manager who looks after your investment and the unit trust. There is a fee attached to that, and that's why a unit trust is more expensive than ETF. So what are those costs entailed in obviously having that specific investment option? Then another thing is that when you are looking and talking about investments should be flexible. What I mean by flexible is that it should enable you to either change the amount that you are putting into this fund or investment, or even avail you or make it easy for you to cash out money without incurring any excessive penalties, because there's some investment opportunity options that if you cash out before a certain period or before a certain time, which goes back to my point of liquidity, then obviously you have or incurred these high penalties and you get nailed on doing that. So make sure that your investment is flexible for you to change any amount and you are able to cash out very easily. And then the third thing that I could say is very important to consider is having an interest beating return. I mean, an inflation beating return, sorry. Whatever investment you choose, make sure at the end of the day, the return that it's going to give you will be at an inflation beating position. You don't want to be putting away money, investing, and at the end of the day, you have wasted your time and money because you've been investing in something that is not even giving you anything that's inflation beating as a return, because that is just a waste of time and money, if I'm being very honest. So speak to a professional, speak to someone when you are taking out this investment option, and ask them just all the important questions and ask them to explain to you at the end of the period, how are they seeing the fund? You know, how can they project? Will it be in a positive or an inflation beating position, or like what's the performance of that specific investment type or investment portfolio? It's very important. And then the last and final thing that I can say, please avoid, which is very relevant in South African context, because I've seen this happen quite a few times, where people are investing and putting their money in investments that are not regulated by the Financial Services Board, and they lose money on these too good to be true scams. Please, please, please make sure that whatever place you're investing your money is regulated by the FSCB, and you are making sure that this is a company that can deliver on their promises and on their returns, and should you have a problem or whatever, you can go to someone and get help from them, and they're not just a scam or a too good to be true place where you invest your money and you lose everything. Please don't get scammed. I hope this video was very helpful. Please do comment down below and let me know, where are you investing your money? Was this video helpful? I want to know if you find this really helpful and you enjoyed it. As always, keep on hustling. I will catch you guys on my next video. Bye.